Welcome to On Tilt Trading. I am currently short in Bitcoin. I'll walk you through what I have trading top down. First, we'll come over here. Actually, we'll start on the 1 minute. Trying to catch this reversal. Got chopped up a bit here. There are about two positions that failed there while I was trying to catch the top. Not a good idea. But now this candle here has started to turn when I actually made the correct entry. So starting here on the 60-minute for top-down analysis, we can see today during the London session, price delivered here to the sell side, swept the London session here and into the New York session. The London session is traded back into and then traded above here coming into the afternoon session in New York. But both New York sessions having delivery to the buy side. I was able to take a couple positions here to the buy side, some shorter positions, but these two positions were successful. And now this brown line that you're seeing here at the top and bottom that I've just highlighted, these lines are the New York PM session right here. This is the range of the New York PM session. And with this, you can see this candle here trades above the New York PM session, then closes below the New York PM session. To me, this is a sign of weakness and would show that the price delivery algorithm has swept out the buy side liquidity resting above the New York PM session and would now look to sweep sell side liquidity. So this would be external range liquidity up here. And now I would look for the price delivery algorithm to seek internal range liquidity, which would be right here as this fair value gap and right here this fair value gap. So both of these fair value gaps have not been traded into until now. This one has now been rebalanced, and now looking for this one here to be rebalanced. Based on my risk to reward parameters, I set my stop for the initial positions, these two positions here at 0.002, set their stop above this swing high that swept out the buy side liquidity. Then this entry right here, this stop loss is within the previous candle here. And these trade ideas initiated first off of this buy side liquidity sweep above the New York afternoon session. And then this trade here is triggered off of the previous candle here being bearish. And then in addition to this sweep of buy side liquidity, this trade here is also based off of the previous candle here being bearish. So confluence on that. On this position here, even though there are two positions, it's two positions just been halved. So right now looking for profit taking in this area here, which would be the low of the New York PM session. Since this buy side liquidity was swept out for the session, I would look for the sell side liquidity to also be swept out as well, with two positions looking to do that here with this position here. You can see my entry here, 103.546, stop loss 104.93.9, take profit 102.209, which is the low of the New York PM session. And again, looking to sweep out the sell side liquidity here with the price delivery algorithm. Additionally, the most recent entry has the same information here, but the stop is lower. So the stop loss 103.545.6, entry 103.261.6. I said all the information was the same, but that's incorrect. The take profit is the same, 102 200.9. I believe the other one may have it. My numbers may be off on the other one. 209. What is this one? Okay. This needs to be 200.9. There. In this position, this half position, this is for a rebalance of this fair value gap. I bypass this fair value gap not because it is smaller than this fair value gap here, but based on my risk to reward, it was too close for me to want to target effectively, even though it is a valid target. Had I placed a tighter stop loss, then it would be a valid target. Since I gave this trades or these trades some room, this would be my nearest target. Also based on the fact that this external range liquidity was swept out based on the session, that with this closing back in, price action closing back within the session, I would anticipate with a higher probability that the sell side liquidity resting below that session would be swept out next. So for those two reasons, I did not target this particular fair value gap, even though it is valid internal range liquidity here. And you can see price action now pulling back. We'll come into the 1 minute and I'll walk you through my entries here. So this candle or this Fibonacci retracement tool is the dealing range for this candle here. This candle and this area are the same. This is the internal fractal view of that 60-minute candle. With that, you see me chopping myself up in here, and then you can see after this candle closes, there is a break of structure here that takes place. Then price pulls back. Price pulls back, it tests this area, which there's an order block here. Also test this area, and there's an order block here. So pulling back and testing the breakout levels, where here price action pulls back here and then breaks out here. So testing, this is a break and retest area. So I enter at one area, enter here at the second area. Ideally, I would just want to enter at one of the areas. This would be best, but when I have two areas that could be traded into, I'll typically trade the lower area or take an entry in the lower area, place my stop above the higher area. Unless this lower area has been violated in some way, then I would just look to the higher area. In this particular situation, I split my standard entry, or at least my current standard entry, split it in two, just to get a feel for price action before going in on a full size. And then for the most recent position, this is structured in the way that I had just previously mentioned of what my preference would be. And actually I'll back up here. This candle here is this candle here on the 1 minute chart. And we see that similar type of price action here, where we get this break of structure coming in off of the open of the next candle, of this entry candle here. So we get a level here and an order block here with a fair value gap, mitigation block. These are mitigation blocks. Same thing here, with this being the main block back here, and it has two fair value gaps here in it. So this is the area ideally I would want to get in, but I actually place my stop loss back here. You can see the stop loss is up here above this level. There's a $70.10 spread. So this covers the spread here. So I take an entry at the initial break of structure here. If I zoom in, then you'll see that price traded back into that higher area here, into this order block here. Price traded into this higher order block, this large order block right here before reversing back and delivering price to the sell side. Experiencing some pullback currently. After that price delivery here, you can see price reacting from reaching into this fair value gap and rebalancing this fair value gap. Also price putting in a potential fair value gap, a bearish fair value gap here. It would need for this candle to close. Then price could potentially reach back and seek this internal range liquidity, or could continue seeking this sell side liquidity resting below the New York PM session. If you'd like to know more, visit us at ontilttrading.com. Trade safe. Trade